I've been investing in global equity markets for almost 20 years. My goal is to achieve financial freedom through passive income, and I'm here to take you on that journey with me. In today's world of a lot of uncertainty and high volatility, a lot of us are looking for safe havens, but we're also looking at making our money grow, but with lower risk exposure. Today, I'm going to tell you about a stock that's one of my favorite. It ticks a lot of the boxes. It ticks the box of capital appreciation, of regular and increasing dividend payments, of global exposure, and reduced risk. But before we go further, if you haven't already done so, please hit that subscribe button and hit that bell notification. It really does help the channel. Now, when it comes to the stock that I'm talking about, this stock is in a country called Canada. Now, a lot of you may ask, why Canada? Canada is a country with a population of slightly over 40 million. That means its neighbor, the US, has a population 8 times its size. But even though Canada is a smaller country by population, it has quite a few industries with very few players. What does that mean? That means companies in those industries have pricing power, less competition, as well as higher profitability. At this point, I'd also like to tell you that I recently made a video on one of the best Indian stocks, and I discussed my views on Indian ETFs for foreigners, and I'm putting a link to that video right here. Coming back now to Canada. The industry and the stock that I like is in the banking sector. Canada and the US are neighbors. They both have highly developed banking sectors. However, the way banking has developed in the two countries couldn't be more opposite than each other. Why do I say that? Well, if you look at the Canadian banking industry, it is much more conservative and more concentrated. In the graph here, you'll see the population of the two countries, but what's very interesting is the difference in the number of banks these two countries have. The US has a larger population by about 8 times, or slightly more than 8 times. However, it has a far larger number of banks. What does that mean? A lot of banks in the US are regional banks. They operate only in an area where there's a certain industry, which means they have a high risk exposure. And that's been proven even over the last few years, where you've had some banks that have completely collapsed because of the massive risk exposure in a small area. Canada, on the other hand, does not have that issue because they have 5 major banks that basically dominate the entire banking industry. They do have some smaller banks, but by and large, it's these 5 banks. Now, why is that an advantage for you as a shareholder? Well, that's a big advantage because these banks can then have pricing power, they have less competition, they're able to pass on that higher profit to all of us as shareholders. Canadian banks are much more conservative when they also lend. They don't have these adventurous or these very creative products that banks in the US have, and as a result, during the financial crisis in 2008, and of course that crisis went on for quite a few years, Canadian banks didn't collapse. In fact, Canadian banks didn't even drop their dividend. If you look at the 5 big Canadian banks, dividends have increased over a period consistently. Now, the bank I'm about to tell you about has increased in value by almost 3 times since its lows in COVID. Not only that, it's also increased its dividends significantly. Yes, the bank I'm about to tell you is the Royal Bank of Canada. Now you may say, hey Niranjan, what about the other 4 banks? Well, all the 5 banks are good. But why do I like RBC? Number 1, it is the biggest bank by assets as well as market capitalization in Canada. That gives it a certain moat, that gives it certain economies of scale, and that means that it still does have some capacity to grow in the future as well. If you like watching this video, please hit that like button. I'd really appreciate it. Let's talk a bit about the other banks. Well, TD is also a really good bank, but TD has been involved in some, let's say, very creative and interesting things in the US. I'm sure you can Google more about that. But here's the thing. Because of the things that it was involved in, it's now under an asset cap in the US, which means its growth is limited. And the US was or is one of the areas where the bank was counting on for its future growth. RBC, on the other hand, has also expanded abroad, but it's done it in a more conservative and systematic manner. When it comes to the Bank of Nova Scotia, well, they've also gotten into different markets, especially in Central America. But I never found it at the right price point when I was doing my own research. Now, all the 5 banks, at certain points of time over the past few years, have been available at very attractive valuations. So my personal belief is I don't think an investor is really going to go wrong with any of the 5 banks. But yes, different banks may be at a good value point or maybe a good value proposition at different points in time. Now, a question that you may ask me is, which bank do I think is going to do well in the future and which bank is going to give the highest return from here on in? Honestly, I don't know. Your guess is as good as mine. What I do know is that these banks, especially RBC, have a lower risk exposure than, let's say, their counterparts in the US. I also like the fact that the dividend yield is very, very attractive. RBC stock today stands at over $200. It declared outstanding results, and my belief is that this bank will continue to do well in the future as well. What's your view on this? Do you like another Canadian bank? Or do you think there's another Canadian stock worth investing in? Please mention your views in the comments below. I'd really like to hear that. When it comes to valuations, my belief is that RBC is now on the higher side. However, if you compare RBC's valuation to some of its counterparts, let's say in other countries, RBC is still very attractively priced. If you like this video, please hit that like button, go ahead and smash it. And please, if you have any comments, please write them below. Thank you.